Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin. I have Angie Maguire on, Vice President of Grains for Citizens Elevator, but better known in the Twitter sphere as the Goddess of Grain. How you doing today?
Hi, good morning. I'm great. How are you?
We're doing good. I'm doing good. Brianna and Garrett just alerted me to that. So you're out there in the Twitter sphere is the goddess of grain. So let's just talk about the weather a little bit here. Kind of a soggy here, November.
Yeah.
How's that affecting the grain markets?
Oh, it's been interesting because what it's done is it's almost the slow harvest. We're not used to harvest this slow. We were behind average for much of October and into November, and finally caught up nationally to our regular harvest pace here the last couple weeks. But in the northern part of the world, in the northern part of the Corn Belt, Indiana, Illinois, Michigan, Ohio, the Dakotas, Minnesota, things like that, we've really kind of struggled and are behind. Here in Michigan in particular, we've got some guys that are completely wrapped up, and then we have other guys that are just struggling to get going. And thanks
Start
to the late,
now?
yeah,
They're trying to get stuff out of the ground now?
yeah, yeah, still trying to get corn ran mainly. We got most of the beans off, but there's an estimated, based on last week's USDA report, over a billion bushel of corn still standing in the field, waiting to get harvested, and Mother Nature is not cooperating with us so hot
They're
this
not going
year
to
at
get
all.
it out. I mean, come
No.
on. With this, I mean, don't their like plows and tractors get stuck? I mean, this kind of weather, the kind of rain that we had, a little bit of snow in there. I mean, are we in a
Yeah.
danger of losing
Well,
some of this crop?
with the wind and everything, yeah. But realistically, we're lucky with corn; it can stand pretty decently. To where if we could get a freeze here in the next week or so, they'll be able to run. Guys are capable of running if it gets cold enough with snow in the north. If we get cold enough to where the ground hardens up, they'll be able to get out and do what they need to do. The guys to the south of us, they're the ones that are struggling because, yeah, they just can't get cold enough just yet to where they can run. And, yeah, they'll get stuck. Pretty much most of the plowing, the fall tillage and things like that, that's done, that's wrapped up. But the harvest is still a struggle to get it out. So it's really messed up the cash market because we were anticipating this huge bountiful crop to come at us, which will come, but instead of coming in a matter of 4 weeks, which is normal, it's coming over 8 weeks. So when you chew through the amount of corn and soybeans that we chew through on a daily basis anymore, when harvest is dragged out, it creates some really false moves in the cash market, and that's what we've been seeing in soybeans, soybean meal, soybean spreads, and a few other things out there. It's just this harvest pace has really messed some folks up this year.
Okay, so the last time you were on here, I think it was sometime in October,
Hmm.
and it was starting to turn a little bit. I'm got the chart up here of corn back in early October, and I remember discussing that the commercials were like really short.
Hmm.
And so, do you think that just the rally that we've had since the beginning of October is more predicated on just the commercials all piling in one way and getting squeezed here, a nice good old fashioned short squeeze in the commodity, or do you think people are maybe kind of eyeing the fundamentals here, maybe anticipating the kind of weird weather that we've had?
I think most of it had to do with the commercials, with the fund activity and the buying that took place. But a lot of that was predicated on the idea that we were going to see some real faults or some real odd moves in the futures market and things of that nature. Not to mention, when I was on the last time, we discussed how everyone was so bearish. I think, early on, corn was trading around the 320, 325 range when I was on the last time. Beans were in the lower nines. And we discussed how, a lot of times when everyone gets on the same side of the boat, when you see it split. And that's what we saw happen is we started to see some buying interest develop right around the first part of October. And then you saw short squeeze take place. You saw some rips happen. We blew through some stops and triggered some other stops and saw some really interesting market moves that benefited a lot of these farmers. Soybeans at one point in time had added $1.80. Corn had added just over 60 cents. So from the percentage base, we had some happier campers. Of course, they'd like to see the prices higher as, as everyone would when they're looking to sell something. But it was a decent rally at harvest. And so far, at least in beans and corn and everything, until we get into January and see what the USDA has to say. I really question how likely it is that we'll see this thing completely wash out anytime soon, aside from the regular holiday sort of back and forth that you'll get.
With your clients, I mean, obviously, you have your levels. You'd like to lock in, the profits. At
Mhm.
certain times of the year, basing on their crop. Is there do you ever like try and get fans? I mean, corn was obviously down there at 320. Found a home down there. Do you ever
Mhm.
do you ever set, like say, hey, we need to take this hedge off, or we need to, take another corresponding position, or when you put them on, you just keep them on and just, ride it out for better or for worse.
Well, I have two different groups of customers that I work with. For me particularly, and anyone in the elevator here, once they're hedged, they're hedged. It's a cash contract and delivery is expected. But I do have some guys that I work with that work with outside brokers that will have, for instance, I had a bunch of guys that had puts on for November or January soybeans when we were down towards the bottom end of the market. And there was some recommendations that we put out basically to either roll out of them, take some profit and buy something at a lower strike, or to just sell if it was a November put, sell that put and look to re-own something maybe a little bit further out. So there are times when we look at it to where you almost have to not so much guess where the bottom's at, but take a look at how much money has been made based on a risk management position and how you can reevaluate or reassess where your risk is at, take some of that profit and add a different position or do something different that'll kind of alleviate some risk and take advantage of what the market's giving.
Well, we've talked about, the fundamentals here. We've talked about the technicals a little bit. Is there anything else out there that you think's been a factor here in this move? I don't think that we've had you on since the market made the Ebola lows, but is there anything else in there that may be contributing to this rally in the grain market?
Well, there was some for a while there. We did see some fear or some transition of money, for instance, where we did see some concern in the outside markets that we would have some issues with the Ebola or anything of that nature. And we did see some money come back into commodities. Your same old risk on approach where or risk off approach where you want ownership of something you can hold, something tangible. So we did see a little bit of that. That did help along with the short squeeze and some other things going on. But really right now in the grain markets, what's really driving market moves is more of a logistical issue that we've seen develop with meal and with some other soybean byproducts. So we've seen some stuff take place with soybean crush and just the inability to get supplies from where they're at to where they need to be. That has really kind of driven the spreads and driven some of the fundamentals to point towards a rally and things of that nature because we've run out of, I don't want to say run out, but we had a record crop and we've had a hard time sourcing and securing some grains with the slow harvest and with the excessive demand that we've had on the front end. But
Uh,
aside from that, it's just your normal, regular old harvest getting ready to roll into the holiday type period for us in the grains.
And also, just looking at the grain markets here. I mean, has there been any others spill over into any of the other commodities? Have you noticed? I mean, do they still trade pork bellies? I'm not sure, but like the live cattle.
They're delicious either way. No, I mean we've seen the livestock market, and that had less to do with corn prices or soybean prices or anything of that nature, and more to do with just the supply and demand of the livestock sector. With pork, for a while, we had some issues with the PEDV virus. So we had limited supplies in hogs, or at least lower than anticipated supplies in hogs. That remedied itself throughout the summer. It'll be interesting to see what happens this winter. It's actually one of those diseases that actually picks up in intensity and the ability to spread when it's cold out. Livestock side of things, we've seen record prices in fats and in feeders, and that's purely because we started feeding the world steak. I mean, they're getting a taste of protein that we're used to that they haven't necessarily had in their diet in the past. And once you taste steak, the last thing you want to do necessarily is go back to tofu. So there's been a surge in demand And when corn prices and everything were high here 2 years ago, you saw a lot of herd reductions and things like that. So in the cattle market, that's been a sustained move higher, or I don't want to say sustained because it's been quite a volatile move higher. But the overall pattern has been higher, and a lot of that's just because, unlike grains, you don't wake up in November and start harvesting a new crop of cattle. I mean, it's slower to rebuild stocks and things of that nature. So it'll be interesting to watch too, with the European poultry markets. There's some issues going on over there with some bird flu viruses and things. And so just watching the overall sector, of course, will be interesting and likely volatile as we move our way into the holiday. And that's what makes my job fun, trying to figure out which direction we might head.
Okay, we're on the line with Angie Maguire. She's the Vice President of Grains for Citizens Elevator, also better known as the goddess of grain in the Twitter sphere. Just one final question for you. In the rally here, in the corn and soybean complex. Volume. I mean, a lot of times in stock and futures trading, you pay attention to the volume. Kind of like if,
Hmm.
a high volume rally shows people not only covering shorts but initiating new longs. Has this just been, I see it looks like, we're just like making a recent high in the move here, sell off. The couple down days that you had last week, it looks like on Wednesday and Thursday, were this just kind of one of those lower volume sell off
Hmm.
days where people were just kind of a little bit tepid, and then
Hmm.
the shift from the weak to the strong here, you find support and you rally back. Have you noticed any trends in the volume on the recent rally and also that little decline we had at the end of last week?
Oh yeah, for sure. I mean, on the good moves higher, we've seen some pretty solid interest. Corn's been one where the volume's been a little less than exciting, and basically what that shows is no one is really excited about it, and that's what's really hard about seeing a rally during a record harvest is a lot of folks are saying, hey, we should be going to zero, which of course is not likely, but still we have a lot of stuff, so everyone's anticipating lower prices, and then we start to see a rally higher and we get up towards old highs. And then at that point, you just kind of see the interest almost not necessarily disappear, but it really dissipates. And I think that's just a sign, when it comes to trying to figure out what we're going to be looking at from a range perspective, it's a sign that we can get up to a certain level and there really isn't any more buying interest, and just the same on the downside. We get down to a certain level and the selling interest tends to wear off. And I think that just shows probably we're going to be riding along. I've been saying it on Twitter for a while now, but I think in soybeans especially, we'll probably get into the point where we have a range that we can almost set our watch to, from a $10 to 10.50 style type range. And that'll be what we trade until we break through. And unfortunately, when you come into a range bound trade, especially in soybeans, usually when it breaks out, it's pretty fierce when it does. And the big question, of course, is going to be which direction is it going to break out to. And likely it'll be January before we get any new fundamental information that'll give us a sign as to where we'll head.
Well, we certainly would like to have you back on again in January after the first of the
Yeah.
year. Angie Maguire, Vice President of Grain for Citizens Elevator, giving us her take on the harvest here in the grain market. Angie, thanks a lot for coming on. Have a great Thanksgiving, and if we don't talk to you before the end of the new year, a Merry Christmas and a Happy New Year, and we'll speak to you soon.
You too, sir. Have a great day.
All right, thank you, Angie
Thank you.
Maguire.